What's up, Mortgage Coach community? Today, I am sitting down with Craig Strent out of Washington, D.C. What's up, Craig?
Hey, Dave. Good afternoon.
Good to have you, brother. I have seen you on stage. I still remember, I think it was like 2 years ago at Mastermind, where you just crushed it with your, what would you call it? Your borrower experience, your presentation. What did you call that?
Yeah, it was a combination of working with financial advisors and delivering a great experience to the borrower, separating yourself out from the competition in an age of digital disruption.
Love that. And so Craig has seen where the puck's going for some time, and you'll notice, like, while he has a perfect loan process, he's been, his coach is Tim Brahim. It's all about the experience, and he's been focusing on, like, what are the processes to drive the experience. So Craig, if you could, I think a lot of people in our community have heard you before. I've interviewed you before, but for anybody who doesn't, tell a little bit about your mortgage practice and your niche.
I've been originating mortgages since 1994. I sort of had an epiphany in 1999 and decided that financial advisors were the way to go for a lot of reasons. I read an article in Mortgage Originator magazine by a guy named Bill Early, and he's still around, and had a chance to meet him recently, actually, and really convinced me that financial advisors were the way to go. So I've modeled my entire practice after it. Since that time, it's the largest base of business I have from any one source, though I do work with realtors and other sources. I find a lot of pleasure working in the financial advisor market. It's a very sticky, strong referral source that delivers good margins and has a positive lifestyle for a mortgage originator as well, for a lot of reasons.
What kind of production volume do you do?
Last year I did about 50 million, probably on pace for that as well. I originate with about half of my time. The other half of my time is spent helping to run my company, Apex Home Loans, and we've got about 35 loan officers here. So I spend a decent amount of time managing that in the branches and salespeople.
Love that. So guys, if you connect the dots, 50 million in personal production while managing and leading, not a team, a large organization that kills it, and also has incredibly high adoption of Mortgage Coach. We're not going to interview you on that, but I should interview you one of these days on how have you done such a good job of building a Mortgage Coach culture. Let's save that for another day. So we talk all the time that there are riches and niches, and notice that Craig has a niche. And I do advise, well, you can do loans with anybody, and you can have people outside your niche. With the disruption that's coming, you need to WAZD your business. What Amazon and Zillow can't do, you need to do. And so a niche is a great way to do that. Craig, walk us through your advisor experience at a very high level, and then we'll get into how Mortgage Coach integrates into that, and we'll do a strategy.
My advisor experience in terms of working with advisors or taking an advisory role with the borrowers?
The borrower experience from an advisor lead. So you got a lead from one of your advisors. How does, give us high level on that experience, and then let's do it in a way that tees up a total cost analysis.
Sure thing. So, some of that starts with best practices. So beginning, very fast response ratio. So I have a pre-written email signature that I use for an advisor referral that I send immediately after receipt of that referral. I train the advisor ahead of time with best practices as to how to introduce me. Here's what you should be saying. Sometimes I'll even write it for them. They can keep it. Here's what you should say. Here's the CC to me. And then a very quick, warm reply back to me. I reply back all to the advisor and the client, and I take it from there. I make an immediate introduction to my loan partner who's been with me many years. And she's absolutely amazing what she does. She takes that initial call and she queues up an edge callback. So that first call is discovery, going through a series of questions, getting all the information we need to develop a detailed spreadsheet of options that we're going to review together. We have scripting around that. A preset time is met for us to speak by phone and ahead of that call or in person, but it's typically about 75-25 phone versus in person. Ahead of that call, the spreadsheet is emailed to them. And then I jump on the phone with them. They've got it already queued up and everything. We've trained them on that in our scripting and emailing. It's ready to go. I jump on the phone. I take over and I do an Edge Live presentation. And as part of that presentation, we've already asked questions about maxing out 401k, about saving for college, about insurance policies and things like this. And so I really get deep in there, and we have a mortgage planning conversation. Rather than looking at the mortgage in a vacuum, here's rates, here's points, here's closing costs, all that. We look at the mortgage and we use a lot of people don't on Mortgage Coach use some of the features. We go deep with the reinvestment feature and with the investing, the difference in the long-term wealth accumulation, balance of the mortgage compared to balance of the assets, so on and so forth. So that's what that high trust conversation, which we talk about a lot, is doing a mortgage planning conversation, managing the liability side of the balance sheet for these prospects.
So much gold in everything you just said, guys. So Craig is a mortgage advisor. Craig is a mortgage planner. His advice is so valuable that a consumer would pay for it. You know, like after they go through that experience, it's worth $1,000. It's worth tens of thousands of dollars by the way he delivers that experience. So before we get into a script on how you tee up Mortgage Coach and you show your screen, just give us a feel for how you train your your advisors to refer to you. You know, what is the gist of that email, or how does that sound, so we can get a feel for the referral and then the experience?
I think you have to first show the advisors yourself what you do, right? So when you talk to financial advisors, you ask them why they don't have a mortgage person on their team. The answer I generally hear from them is, one, I've had bad experiences with mortgage people that my clients have used, or two, they haven't really shown me anything I don't know. And you know, there's really been no reason for me to partner with them. So when I go to an advisor meeting, I come with very specific examples of what I can be doing to help them and their clients. More so the client, of course, which is a win-win for everybody. So I think you have to be well-versed already in understanding certain strategies around this so that you can properly consult the client, you can properly consult with the advisor. And just as an example, before I even picked up this call, Dave, I was literally on the phone with someone who was going to sell a home with about $400,000 in capital gains. Was going to move out and rent a home with $400,000 in profits, not really knowing that they were excluded from capital gains as a married couple up to $500,000. You have to know your basics of financial planning, estate planning, and taxation to be able to have these conversations correctly. And then you can use Mortgage Coach to properly illustrate these strategies. And when you do, it's a win-win, because that client's going to sell and put $400,000 with their advisor, and I just created a massive amount of money for him to manage, and everybody's happy because we save them a crazy amount of taxes and show them a Mortgage Coach where, you know, the mortgage payment was here versus here with all this extra coming in. So there's a lot of great strategies you can do if you have the background.
So they're educated. When you have that meeting with the advisor and you're showing them the Mortgage Coach, is it an iPad? Is it a laptop? How do you deliver that in the conversation? What's the device you use?
It varies a lot. I mean, if I'm doing one-on-one meetings, oftentimes I have case studies that are printed out. I like doing that. I don't bring a tablet, but I have my laptop with me. Sometimes I'll flip it around. I present to groups of financial advisors, typically anywhere from 10 to 20 advisors. I do that fairly frequently. So I'll just pull an Edge Live up on the screen behind me, and I'll also hand them out a printed version of the case study so they can follow along depending on how the room is set up. So I'm walking them through the detail in the case study and showing them one strategy versus another. The one I do it most commonly with is the 30 versus 15, because I think that's the easiest one to do with, and and it's the one I sent to you. It just makes such an impact on things to see that, and it really changes people's thinking very significantly.
Yeah, and it lets you flex all the muscles that you have. So let's pull up a total cost analysis. Folks, you know, notice that Craig, he's got a laptop ready to go. He's got paper ready to go. A modern mortgage experience is however that consumer or that advisor wants to consume it, that's a modern experience. So some people do want the iPad, and I do hear more and more mortgage coaches that have an iPad ready to go, but having it printed too, you know, like iPad, iPhone, Android. Be ready to deliver it in the channel, in the device that the advisor and the consumer wants. So tell us the story and the strategy behind what we're seeing here.
Yeah, so Dave, be ready to deliver in the channel they want, and also have backup, because you don't know if you're going to be at a Starbucks with a ton of people where you can't turn your laptop around. So always have backup for whatever you're going to do. Have two ways to show it.
Love that. And always have a couple strategies ready. So, and folks, while we're focusing on the advisor experience, if you're going to meet with a realtor and you know they specialize in first-time home buyers, have a rent versus owner ready. If you know they are high-end, you know, have a move-up analysis, maybe a seller buy-down. But always come ready to show how your advice is tangibly different and tangibly more valuable than your competition. So let's rock this one out.
Yeah, so I mean, if you're a loan officer, no doubt at some point in your career, you've had somebody say, I want to look at a 30 and a 15. And you say, well, why the 15? And they inevitably say, well, I know that I could save thousands of dollars in interest if I do the 15. And most loan officers stop there and that say, that's right, the rate is lower and you could save money, so you should look at it. And you know, the general consensus among people in this country is that all debt is bad debt. It comes from a grandparents, great-grandparents mentality, even parents' mentality, depending on how old you are. And it's just not factually correct from a financial planning standpoint. Emotionally, there are people that just don't want to have any debt. And if that's the case, there's not much way around it. But if they're doing it for financial reasons, because they think they're saving money, well, they're typically losing a lot more on the other side on the opportunity cost. And you need to be able to illustrate that to talk about it. So here we have a 30-year fixed rate loan. We're at 4 1/8 here. We've got a 15-year fixed 3.5, typical spread between the two roughly, right? So if we go to more info and we look at the payment breakdown.
Time out, Craig. So while you're hitting that and it's highlighting, I want to remind folks that he's scheduling this appointment, and we call it Mortgage Coach Live. He's clicking a button, and whatever he's highlighting, the client's seeing that. And I've interviewed you before. I'm going to put a link down below to my last interview with Craig, where we talked a little more in detail about your live experience. But I just want to make sure folks didn't scan past that.
Yeah. So on more info, and I'm going to call out the payment here, I have a $920.93 difference, meaning the 30-year fixed payment is $921 lower than the 15-year payment. So if somebody says to me, Craig, I want a 15-year mortgage, I save a lot of money over time, and I want to have my house paid off in 15 years, I might say to them, well, Dave, what if I could show you a way where your house would be paid off in 15 years, and not only would you pay it off at year 15, you'd have some money left over, and along the way, you'd have a greater tax deduction and a whole lot more liquidity during that entire 15-year time. So if you needed it, it would be there. Well, that sounds interesting. Okay, let me see, which is what they would say. Why would they say no to that? They want to pay it off in 15 years. So I'm going to show them an alternative way to do it. Choice one, 15-year mortgage, make the payments every month, force discipline, no choice or control over the money, finish in 15 years, sit on a huge pile of equity that is basically an illiquid asset unless you want to pay me to borrow your own money back. That's choice one. Choice two, we go to reinvestment and we say, here you go. If you take this 920 difference at 93 cents, 920.93 at a 6% rate of return. Now, some of you are going to throw your arms and say 6%, where can I get that? Real estate's the best. If you talk to any advisor, if you look at any 100-year chart going back on the S&P way back when, a reasonable rate over a 15-year period of time is 6%. And of course, in Mortgage Coach, you have the ability to adjust that number up or down as you see fit in the reinvestment screen. Okay, what happens? At 15 years, they have $267,000 in accumulated wealth, okay? As a result of putting away the difference in payment that they were already willing to pay, they put it over here, well diversified with the advisor that either referred them to you or even better, you referred to a new advisor and gave them this cash flow. Now, Craig, you said I could pay the mortgage off in 15 years. What about that? Well, the loan balance at year 15 is $259,877. So here you have $267,824 sitting over here in this managed account, and here you have a loan balance of $259. So you know what, Mr. Homeowner, you want to go ahead and pay that mortgage off per the original plan, go right ahead. You're welcome for the extra $7,000 that's left over and the better tax break all along. So this is a key core strategy illustrating a 30 versus 15 from a mortgage planning standpoint that I use very frequently.
So mic drop. Every mortgage coach, this should be something that you are a master of this conversation. Anybody that just listened to Craig go through this, you could tell he's had this conversation not dozens of times, not hundreds of times, over 1,000 times. He has had a conversation very similar to this. So if you want to be able to make the claim, my advice makes a difference, you need to be able to go, my advice makes a difference, let me show you how. And 30 versus 15, you should be able to have this conversation. And if you want to have CPAs and financial planners, we call it the wealth team here at Mortgage Coach, if you want to have them as engaged, inspired, active referral partners, you need to meet with them. You need to tell them that your advice makes a difference. And then you need to be able to show them different strategies on how your advice is in the best interest of their family. So, dude, you crushed it. Anything else from a leadership perspective you want to share on this particular strategy in this particular case?
In this strategy, I would say, there's Stephen Marshall put out a great article many years ago called A Tale of Two Brothers. And it talked about the one brother who took a 15-year mortgage and paid extra money every single month and was so proud of himself and had less interest and paid it off. And then guess what happened? They both lost their job, both brothers. And the one brother who had all this equity couldn't borrow against it because he had no job anymore, couldn't get the money out of his house. He had to sell his house, dislocate his family and his children, all that. Well, the other brother who had the 30-year fix, who was going for the same strategy of paying it off for 15 years, by the way, he had all this money set aside. So now he was able to sustain a long-term payment on the mortgage that he had by pulling back his investment and continuing his mortgage payments going on, and he could stay in his house for a period of time longer until things sort of eased out. So this isn't just money saving and better, it's smart and shrewd financial planning, because the last thing you want is to have no mortgage in the highest earning tax years of your life. That does not make any sense. So the 30 versus 15 makes sense on so many different levels. And there are a few circumstances where the 15 makes more sense. If you're retired, if interest rates are at historical lows, if you're going to live there forever, all of those things. So there's a time. But for most people who ask about it, just because the rate's lower and if they're going to save money over the long run, it's the wrong choice most often. But they won't take your word for it because they think you're a biased mortgage person who just wants to have them a longer mortgage. You have to show them, and you have to remind them, by the way, that we get paid exactly the same amount regardless of which choice they make.
So got a few more things to cover. If you're on this call and you want to have advisors as a channel of business, and you're either doing it and you want to go to the next level, or you don't do it and you want to do it, let us know what you liked about this call. You're watching this in our Facebook group, put a question down below, share a strategy. I'm going to put a few links to some other resources. And then Craig and I talked at the beginning of this, and he agreed that whoever asks the best question or shares the best takeaway, like he shares something of value, a quote, a value, just whichever post down below Craig and I like the best, you're going to get a 15 to 20 minute coaching session with Craig around advisor business. You can ask him one or two questions. His time is very valuable. He also does some coaching, which we'll talk about at the end. But if you guys want a free 15 to 20 minute coaching session with him around how to get more business from advisors, put a comment down below. We'll pick the best one. So Craig, let's go back to the core total cost analysis. Let's just walk through why advisors love it. By the way, if you could just click that X so we could see the TCA. Boom, go to the top. So first of all, this is why you should like it. It's personally branded advice. It's got your photo and your brand. It's got your company logo, and it's a shareable link. And you can add a video to it. And you can have an interactive live conversation with it. Go to the bottom real quick. The two most important things are that you can show different time horizons. Let's face it, loan officers focus on payment, rate, and closing costs. Mortgage advisors focus on impact periods of time. Whatever that time frame that family wants to have their MI paid. They want to move up. They want to be debt free. They want to look at life events. That's what a mortgage planner does. So it's that time. And then you'll notice in the bottom left-hand corner, we integrate in social survey. Craig, any comments, thoughts on this new integration?
I like it a lot because typically when I would send my follow-up emails and all that stuff, I would always send links to the social survey reviews. Hey, check out my reviews. And, it was important to do that. It's third-party validation, but it always felt sort of self-serving, like, hey, look at me, click here. The fact that this is built in now and I don't have to do that anymore, I like the instant credibility, and I like that the third-party validation is built into my spreadsheet, and they can click on it and see more if they choose to do so.
Guys, it's huge. I mean, there's never been a better time to be a mortgage advisor because you got all this value in one shareable link, video, interactive, cost over time, debt-free, and social proof that you're the bomb. So Craig, any parting comments before we stop sharing the screen? Anything else you want to show on the actual total cost analysis?
No, I mean, this one is fairly easy to follow, and it's pretty simple. I mean, the fact that you can show what the balance is, I would just advise if you want to do this one yourself, make sure that you set the long-term investment strategy at year 15 so that you make sure you cut where the loan balance is and the investment balance at that time so you can compare the two to each other. So that's an important little insider tip there.
Nice pro tip there. and make the interim, so long-term is 15, make the interim on point with the client. Like, oh, you told me your goal is to move up in 3 years, 5 years. Like the more you can be, I asked you these questions and now I'm showing you how to achieve your interim and long-term goals. The more wow, the more value. Also, one last thought, guys, this is tangible value for the planner. Like when you meet with that planner and you're showing this strategy, you're like, I'm an extension of your advice experience. I'm an extension of your sales process. And you can make the case that I am making you look better. I'm helping justify your value to your clients. And for realtors, like when you deliver a total cost analysis to a realtor and we know that their commissions are getting grinded and they're very worried about their commissions over the next 2 and 3 years, every time you give a total cost analysis, you're justifying that realtor's value. So Craig, if you could stop sharing this real quick, let's just riff on 2 things. So one, I do want to hear just high level, when you train an advisor to give you a referral, how do you want to be positioned? What are some talking points within that email that they use or within how they referred you? Just give us 30 seconds on that.
Well, I actually give them the case studies and the strategy because they get the same questions over and over. So, somebody might say to them, I'm thinking about refinancing on a 30 versus a 15. They'll have direct access to this and they'll say, hey, look at this. It's pretty amazing, because I'll sometimes record a video of the case study and give it to the advisor. They could just show that to the client and the client could be blown away. And then they could say, hey, by the way, I can introduce you to this guy. He's a friend of mine. And so you can add more wow, by the way. You could do another TCA where you take this thing out 30 years instead of 15, and you could wow the advisor by showing, holy cow, if the 15-year guy realizes he made a huge mistake and now wants to invest the whole mortgage payment, he still can't catch up with Barry Lee teaching us velocity of money and all these other things we've learned. So it's still really an amazing thing you can do, and you can give the advisor those tools. So what you want to do is you want to give the advisors the tools and the scripting to position you properly. And if they don't really fully digest the tools and the scripting, it's not that important, because they know that you're the expert just by you providing them. And they'll say, hey, look, I'm an advisor, I'm not a mortgage guy, but I met this guy and he really knows what he's talking about. Let me connect you with him.
Yeah, and if you've taken them through your experience, they're going to refer you with more confidence and more passion. So make sure all of your advisors understand your advice experience. And then one last scripted question, right before you show the link, how do you position Mortgage Coach? I know you used the word spreadsheet a few times. We call it a total cost analysis. What's your language and how do you position it so that they see value in it when they click?
When I'm talking to the advisor or to the client, Dave?
The client, the borrower experience. Like literally click on this link because, go through this. Do you call it a spreadsheet or do you call it a total cost analysis?
Most people don't know what the TCA is. So I like to use layman's terms, just like I never use acronyms in mortgage. So I say I'm going to build out a detailed, interactive spreadsheet that breaks down rates, points, loan structure, and closing costs to the dollar. That's what people want to hear. When people ask you what the rate is, that's what they want to hear. They want to hear, 1, you're going to give it to them. 2, you're going to do it in writing. And 3, you're going to uncover every single dollar they might spend. So I'm answering their rate question. Again, a Dale Vermillion technique going back 20 years. If they ask a rate question, give them a rate answer without giving the rate. Because I'm going to give them the rate, but I'm going to do it in a much more professional manner than just slinging it to them over the phone, which Tim would kill me if I did that. So instead, I'm going to provide your great tool, and I'm going to show them in writing and then get on the phone with them and walk them through it together.
Yeah, I think I learned back in the day, the power word from Dale was exactly. I'm just going to ask you a few questions, and I'm going to tell you exactly what your rate is, what your payment is, and then I like the way, and I'm going to break it down to the dollar. So guys, this has been killer. If you got value from this, like it, please comment. We'll pick someone to get 15 to 20 minutes of coaching. And then you are now, from what you told me, you're coaching just a few people. You're looking for people that are an essence match, that want to take their advisor business to the next level. How can people reach out to you and connect with you if they want to go deeper and they want to possibly coach with you?
Yeah, if loan officers are really serious about pursuing the advisor niche as sort of a major pillar in their business, they need to get the background in the training. They need to understand where to find the advisors, which ones to call. Some are worth calling, some are not, and I can explain why. How to target those people, what to say when they call them, how to prepare for the meeting, what to do when they get to the meeting, and then how to follow up properly and behave within that relationship. So that's what I coach on, a couple people at a time. If people are interested, they could just email me. It's my first name, Craig, at Apex Home Loans, APEX Home Loans. That's all one word, S on the end.com.
All right. I'm going to put a link down below. If you're watching this on YouTube, there'll be, a description with Craig's email address. The guy is one of America's best mortgage professionals. I know a lot of great people. The experience that he delivers saves people tens of thousands of dollars, helps people become wealthy faster because of his advice. And guys, that's where you want to go. So Craig, last question. There's so many new people getting into the business right now. What advice would you give to your 25-year-old self? Or if you had a 25-year-old kid getting in the mortgage business, give us a minute's worth of advice.
Well, my 25-year-old self decided to go after financial advisors, and it's worked out really great. So I would give that same advice. The way I would say that is, go where other loan officers are not. And what is every loan officer doing? They're pounding the phone, chasing agents. I'm not saying realtors aren't good sources. I work with some good ones too, but there's some really good ones and there's really some not so good ones. And there are some negative lifestyle, challenges when it comes to dealing with a book that's only real estate agent related. So I would say, get educated, understand the financial planning pieces, become a student of that, just like you become a student of mortgages, and consider diversifying your book of business for long-term sustainability by pursuing the financial advisor market. You'll be happy you did.
Boom. You heard it from Craig, and make sure you tune in to the Mortgage Coach YouTube channel. We will educate you. Think of us as Netflix for you as a mortgage professional. Engage in our Facebook group, ask questions. And remember, guys, the best comment down below that Craig and I like the best, for whatever reason we like it the best, you're going to get a free 20-minute session with him. Brother, you crushed it with value. I'm so grateful, man. Have an awesome day.
Thanks, Dave. Take care.
All right, take